So in that previous video, we went through on the whiteboard exactly what the best timeframes are for you to trade with the use of the multiple timeframes. Now what I'm going to do now is just go through on this price chart, demonstrate exactly how you will apply this on a real-time chart and how you can look to use those multiple timeframes to help you with your trading. Now remember, we're going to go through each step that we went through before. The first one was as a part-time trader. You're going to look to use the monthly time frame, the weekly time frame, and also that daily time frame. That's how you're going to use all those three time frames with multiple time frames to help you to find the best entry of a daily time frame with the use of the multiple time frames for a part-time trader. So first we go to a monthly time frame. What we have to identify first is that area of supply and demand. Now in the previous videos, as I mentioned, will help you to identify those zones of supply and demand and will help you to mark them on your charts. But I'm just briefly going to mark them. I'm not going to go through into detail why I'm marking them. That's something you can learn in another video that I've already done. So what we would have is we do have this area here of supply on a monthly, and we have this area here of demand. And as you can see, the market came up into this area on the monthly time frame. Now once we have identified this as a monthly area of supply, we then need to go down and see where that area of supply would be on a weekly. So let me just mark off on here. Let's mark off this as an area here as an area of monthly supply. We go down to a weekly time frame. Now weekly area of supply would be this area marked, and as you can see, the market's come up into not just the monthly. This is our monthly area, this is our area of supply on that weekly. We're now having a combination of two time frames confirming that price is in a supply. This is why we use the multiple time frames, those three time frames. Remember, the next one is the daily. So let's just now mark out this weekly. And what I'm going to do for weekly, I'm going to mark off this area that should change to back to white. So we can see that we're now inside this area of supply on both the weekly and the monthly. Now we're going to go down to a daily. This is that area on the daily where the market has come up and we've gone higher once again, creating this area of demand. Now as soon as we see this area of demand removed, we can then start drawing out new areas of supply. So our new area of daily supply becomes this area. Now as you can see, the market didn't quite get into that area of supply, but as the market continues to drop down, it will create new areas of supply. This is another new area of supply. Now even though we do see the market breaking out that area, we do also have it come back here for potential trade. And that's how you use the multiple time frames. And you'll be able to see that the use of the top-down analysis will help you to identify these types of trades with the use of multiple time frames. And it's right in this area here where you'll be able to go down to lower time frames and look for an entry, or you could have taken what I call the set and forget entry off that zone and the market would have dropped away for a nice profit. And that is how you can use a set and forget entry, again which you will see in a future video, exactly how to use that with being a part-time trader with a full-time job. That's using the monthly, the weekly and the daily time frames only. So now we've gone through the part-time trader of the three time frames you can use. Let's now remove everything off the charts. So let's now look into the next one, which is becoming a part-time trader, trading each week. So you're basically not got a full-time job, you're just perhaps looking to trade part-time with supply and demand, and you're actually not working, or you just have part-time work. And this is to top up your income, and you're looking for a way to trade the market each week. This will allow you to look to trade and hold your trades for a few days, or even just for a few hours. But the time frames we're going to use on this one, and we're going to look to use most probably a weekly, a daily, and then a 1 hour or 4 hour for the entry. That is how you're going to look to trade with this type of multiple time frames. This is the best time frames to use to look to trade those trades during the week. So how would you apply this again? Well, again, we're going to look at the weekly time frame. Let's look at a weekly area of supply in the same situation. We mark off this area of supply, go down to daily. We already know that this was an area of daily supply. This was an area of daily supply. Let's just mark that back. And it's this area here where you're going to look for the market to come back into. So we'll mark this off. Now we'll go down to 1 hour time frame. Let's go back. And as the market comes back up, what you're going to do is you're going to start marking out those areas of demand. So this is an area of demand. The market continues to go higher. Create this area of demand. And we're looking for this last demand zone to be removed. That is removed on this bearish candle right here. That then creates this area of supply. And as you can see, the market drops away, pulls back, and it's right there. You would take your entry based off a confirmation entry. And you can see the market dropped away in your favor very, very well. And that's how being a part-time trader, but trading each week for a profit in the market, can help you to make a substantial income. Again, I know I do call the other one as a part-time trader, but that's when you have a full-time job and you're looking to trade just those daily time frames. This is looking to trade the lower time frames, and you're looking to hold a trade for a few hours, for a few days each week. Even if you only take one trade a week, this is perfect for that type of trading. So that is how you can use those 3 time frames to actually trade successfully from a daily area of supply, looking for that confirmation entry. So once again, I'm just going to clear everything off the charts, and then we'll go through that final type of trading. So the final way is you would look to use the lower time frames. Now, as I suggested, you can look for a 4 hour, a 1 hour, and then you would look for a 15-minute / 5-minute entry. Now, these types of trades are best for a trader who are looking to be in and out of the market within a few hours at the most. And you'll be looking to trade this each and every day of the week. Now, there's 5 days a week you can look to trade using this type of trading. So remember, you don't have to be in the market every single day to make a profit. And it's those 15 and 5-minute time frames you'll be looking for those trades. So let's again briefly go through exactly how you look to identify this. Now, you can go through, and as you will learn in the next videos with my top-down analysis, you could actually look to use those higher time frames to confirm the direction of that trend for the week as well. But we're just going to go through with a 4-hour area of supply or demand. Now, the area I want to go down to, let's go down first to a 4-hour time frame. So we can have a look and see where we can identify an area. So this is a good area of supply that we can mark out. You can see the market, it rallied up, made this bearish candle, which is an area of demand. We then broke it to the downside, it creates this area of supply. So when the market comes back up, this is when you can look for a trade. Now, you have an option here. You can go down to a 1-hour time frame, wait for the market to drop out on the 1 hour. That would be this zone right here. And then you look for the market to come back on a 15 or 5-minute time frame for entry. So what we're doing, we're confirming a zone within another zone. Now, that is the best way to find a trade each day. So if I mark out this area here, now even though we see the spike above on that bearish candle, we don't need to worry about that. So we go down to a 15-minute or even a 5-minute. Let's go back in time. This is where you're looking for that reversal. You can either look to take an entry straight off this area and you put your stop a good few pips above, or even above this zone on the 4 hour, and you can see the market didn't break the high and it dropped to the downside. Or you can look again to a confirmation entry and you draw out your new zone on this occasion would be this zone here in the market, but the market didn't come back and test it. Now we can always look at the 15-minute time frame and see what that looks like. Again, we dropped out, but we never came back to test it. So what can you do in this situation? Well, when we know that the market has already come off this 4 hour and 1 hour, once it starts to drop down and make a new area of supply on the lower time frame, being this 15-minute chart, you would then start to mark out your areas on the 15-minute. And it's here you look for an entry with the lower time frames, and you look to hold that trade for a few hours at the most. As you can see, that market dropped out of that area of supply perfectly. Now that all comes down to taking that sell and forget entry once we're going in the same direction, bouncing off those higher time frames areas of supply. Combining it all together is what's going to help you to really find those trades and properly take them. So this is the final way you can look to take a combination of those multiple time frames for the best time frames for you to trade with. This is for somebody who has the time to sit there and watch those charts each and every day to look to trade the market with the flow of price. Now in future videos, you're going to learn everything about that set and forget strategy. Also, you're going to learn about the confirmation entry and much more. So if you're not already subscribed to the YouTube channel, I do suggest for you to subscribe to my YouTube channel right now, and don't forget to hit that notification bell, because then you'll be notified on the next video that I release. So this is exactly how you can look to apply for the best time frames to trade with on your situation. Let's recap exactly what we went through. We went through a few different ways. You have the monthly, the weekly, and the daily time frame for that part-time trader. So that's somebody who's working full-time and just wants to trade that daily time frame. Then we have somebody who wants to trade part-time each and every week. You're going to apply this with the weekly, the daily, and most probably a 1 hour entry. That's how you're going to look to apply that, so you can look to trade each week. Most probably only going to look for 1 or 2 trades a week at the most. Remember, if you want to go back on this part of the video and watch exactly how I took those trades, just showed you quickly how you could use this type of trading, then just go back and watch this video again. And the final one we just went through is based off that 4 hour with a 1 hour, and then you're confirming it with the 15-minute/5 minute entry. That's either you're looking for the reversal entry out of that 1 hour zone after coming back into this 4 hour zone once again, or you're looking for the drop out and looking for a new area of supply being created in this occasion, going in the same direction now as the higher time frames. And that's for somebody who can trade more on a full-time basis and has the time to watch those charts every single day, and then you can just look for 1 trade a day. So I hope this video has helped you to understand what are those best time frames to trade with the use of the multiple time frames. Now again, don't forget there's going to be much more content coming out within this series of the supply and demand trading. So if you want to capture those videos, don't forget you need to be subscribed to my YouTube channel. So I hope you have enjoyed today's video and it's going to help you to progress as a trader with supply and demand. And don't forget to watch that next video that's coming up right now.